things to bear in mind there. One, that's not out of line with global averages. France is 20%, Ireland is closer to 40%.
But it doesn't make it acceptable.
No, but you have to remember that we're not talking about an oil leak. We're not talking about methane leaking. We're talking about something that goes into the environment. And so there is a economic as well as an environmental trade-off between the work involved in digging up roads and replacing lots of pipes or allowing water to recirculate into the environment that way. And it's a totally legitimate question, and when and this is the first host site ban in a decade, we have water shortages. I think clearly at that point we would really wish that less water was leaking into the environment and more was going to households. But I think there's a real trade-off between the costs of doing that work and the environmental impact of doing that work and the benefits that you get in times like this.
Graham, you have the leakages, and we were talking about that 25% from Thames Water. And then you have the sewage, the question of sewage as well. Recent reports that, 9 million hours over the last 6 years, sewage pumped into British Ocean. So you have the leakages, the sewage, you have the very high compensation from the men and women who lead these companies. It isn't some leftist fantasy, is it, that a nationalisation of these companies should be considered? The regulatory risks are becoming more potent, surely.
There's no question the regulatory risks are rising. A couple of years ago, we had to think seriously about what the consequences of nationalisation would be for bondholders. I don't think that's live right now. I don't think that's particularly on the table right now. But you point to sewage, and that's one where there clearly is a risk. There's an Ofwat investigation and an Environment Agency investigation into the sector right now, suggestions that may have been underreported or misreported. We've seen enormous penalties handed out to Southern Water, specifically, and to a much smaller extent, Thames Water, for this in the past. And we're waiting with bated breath to see what comes out of this.
Why are they so bad? Why are they so bad at this? How is it possible that the coastlines of Devon and Cornwall are being polluted by human sewage from these companies? Is it a case of investment? What have they missed?
Again, I think some context is important here. There's the Environment Agency says 98% of beaches, 99% now, is up from 97 a couple of years ago, meet the standards. We're talking about 1% of beaches now that don't meet the acceptable standards. I'm sure that should be zero. It'd be lovely if it were. There are major investments going on. In a couple of years' time, we'll have the super sewer come online in London. That's $4+ billion that's been spent to hopefully remove all combined sewer overflows from Thames's region. And we have a lot of investment going on to reduce that. It's a major focus for companies, particularly along the south coast.
So what does it mean for your credit ratings?
Well, so operational performance has become a big differentiator of the best and worst companies recently. Companies like Severn Trent keep winning awards, rewards from their customers for strong operational performance. Companies like Southern and Thames persistently negative, and that is one of the reasons that ratings are starting to differentiate. We have Southern at the bottom of investment grade, largely, in very large part because of the fines they've had to pay, and we have still companies sitting up in single A, where strong operating performance means strong financial performance.
How should shareholders be thinking about all these risks then, if they have exposure to these companies at a time when it looks like getting dividends back in play is a far off prospect?
Well, that's an essential point. The dividends have not been large out of the sector now for over a decade, and indeed equity has been going in large amounts to Southern Water, to Thames Water, at Anglian Water. Investors are backing the idea that they can turn around the performance of some underperforming companies and achieve rewards that way. As you say, dividends are likely to be low for at least a few years.
But in the past, did they give too much back to shareholders instead of focus on reinvestment?
So again, I think this is an area where perception isn't quite right. So in the 18 years after privatization, say, there were large dividends as companies leveraged up from almost no debt to the 70-80% leverage where they are right now. But that should be thought of as a sort of a capital structure change. Bondholders coming in where equity holders come out. It was never paid out of large customer dividends. These companies have always been cash flow negative. They all invest more than they bring in cash flow from customers. That's always been the case. And companies, and I think this is a critical point, desperately want to invest more. If we said that we want to gold plate our systems so that
plug leaks, for example, that'd be a good investment.
Possibly. So we could say, let's invest enough that even in a 1 in a 50-year drought, everyone can still fill their paddling pools. I'm not sure environmentally that's a good idea. I'm not sure economically that's a good idea. But if you said to the companies, that is your mandate, go forth and do that. Companies would have their spades out the next day. Companies love to invest. The role of regulators has constantly been to claw back investment, to say, do you think that's really necessary? Are you possibly inefficient in that spending? Is there a better and cheaper way of doing it? And one of the reasons that UK water bills are comparatively low is that Ofwat has been so robust in those challenges over the years.
Okay. Interesting perspectives there. Graham Taylor, Senior Vice President for Infrastructure and Utilities at Moody's, on the challenges facing this water sector. No dividends, at least for the next few years, it seems. Thank you for those insights. Coming up, turning to nuclear as the energy crisis is set to deepen. Germany is considering alternatives to cover the gap left by Russian gas cuts. We'll get the details next. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to the Open. We are 45 minutes into the European trading day. We went from a holding pattern to a slightly more pronounced sell-off that we're seeing across these markets now. Down 0.8% across the benchmark here in Europe. Future stateside, though, look at this. The S&P E-minis down 0.9%. Nasdaq futures down more than 1%. We continue to look at what's happening euro-dollar as well, essentially at parity as things stand. Down 0.3%. Dollar strength part of the mix. But also this line and the energy crisis, of course, in Germany being more pronounced by the day. The German, in terms of energy, benchmark year-end power rising 11%. We've seen, of course, gas prices shoot up again today. So benchmark German energy rising 11% to a record 620 euros per megawatt hour, Francine.
Yeah, I mean, of course, this is Europe's biggest gas consumer. And we heard also from the economy minister, look, be prepared for, in retaliation, for example, Russia to cut even further some of the supplies from Russia. But, you know, the nation and other, of course, major countries are trying to prepare for this. So they're looking at nuclear, and I think coal is at a record high.
Remarkable shifts. And we've got some fantastic reporting again on the Bloomberg around how some of these companies in Germany may have to be forced to even leave that economy if things get worse from here because of the challenges around energy. Now, with Europe in the middle of its worst energy crisis in decades, politicians are being forced, as we mentioned, to look at those alternatives. Germany's leaders say the country may need to extend the life of nuclear plants if it cannot replace all its gas imports from Russia. For more, we are joined by Birgit Jennen, our Berlin bureau chief. Birgit, where do things stand in terms of what policymakers in Berlin are looking at a point where you've got 78% capacity filled in terms of gas storage? What are the alternatives and how actively are policymakers looking at them?
Well, I mean, the government is heavily looking at alternatives. Scholz is currently in Canada, and it is exactly in this context that he is basically trying to get help from Canada in providing LNG in the almost near to medium-term future. But really, talks with international partners have been extremely difficult. We have been talking with some people in the government, and they say that talks with Qatar has run into a deadlock. The same thing is with Norway. Norway has been extending its gas production and gas deliveries, but is also at a maximum. And Canada is also at the moment not willing really or politically able to kind of deliver LNG because it would mean a turnaround in their environmental policy. So it is a bit of a scramble at the moment for the government, and therefore the government is seriously looking at keeping maybe the nuclear plants running for a while.
Birgit, talk to us. We focus so much, of course, on the UK cost of living crisis. What's it like in Germany? Is there more support than other parts of Europe that the government has to put in place? And what also does that mean for Olaf Scholz's popularity?
We already see that his popularity is really going down. I mean, he is been traveling during the summer break through the countryside, particularly in eastern Germany. And last week, we actually had seen sort of the first really outbreak, aggression against Scholz at events. So the mood is clearly changing, and he's very well aware. He has been the government, but has no chance then to pass on some of the extra costs to the consumers, but it's just not enough. I mean, his basically client, his electorate is particularly hard hit because it reaches the low-income earners. So he is, and the government is looking at some form of compensation, but we have to see where the mood is turning during the winter.
OK, so looking potentially at compensation, the political hit there, of course, for the German Chancellor. When it comes to the question of nuclear, Birgit, what is the process in terms of getting this online? There's a deadline, isn't there, for this industry, and how much pressure is coming from industry leaders on this front?
There is certainly pressure in terms of securing Germany's energy supply, because the industry is really concerned that they have to get into regulated rationing. Obviously, that would give a major hit to the economy. So the procedure is that by the end of this month, early next month, the government has done its review, and they are looking at whether where basically nuclear could make a contribution. Because you have to keep in mind the government and the energy crisis is largely an electricity crisis. So and the nuclear is basically not exactly giving making the necessary energy supply needed, because what Germany is needing at the moment is gas. And so basically the government says now, while it probably only contributes a minimal bit to the energy situation, that might be the stroke which is needed to get over the winter.
All right, thank you so much for joining us. Birgit Jennen there, our Berlin bureau chief. In the meantime, euro, if you look at euro-dollar parity, it does seem pretty close. Let's bring in euro-dollar for you so that we have a look at what exactly we can be looking at. 1.0002. I feel like it could really happen any second. The pair, of course, printed some 0.9952 low in July, and that was the lowest print since December 2002. This is also a matter of strong dollar, and then we look at Jackson Hole on Friday with that Jay Powell speech.
Yeah, absolutely. Ties in, of course, to what's happening on the monetary front, of course, monetary policy front, but also that energy story that we're talking about again. Just for the context, some fantastic context coming through from our production team in the gallery in terms of where things stand. So gas prices, European gas prices, again, at a record high. You've seen about a 12% jump. Coal prices at a record high. In terms of that overall power picture for German industry, in terms of the 5-year, this was in terms of power prices, it was around 40 euros per megawatt hour before this year. Currently looking at 620 euros per megawatt hour. 620 from 40 about this time last year. Again, that pressure, and of course that's been fed into what's happening with the single currency currently, just a hair away from parity, down 0.3%, Francine.
Yeah, earlier this morning, it hit the lowest versus Swiss franc since January 2015. Coming up, summer of strikes hits shipping. We're live from UK Port Felixstowe. Next, as workers protest. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
Welcome back to the Open. 54 minutes into the trading day. Losses of 0.9% across European stocks. Let's get out to Felixstowe. Lizzie Burden is putting that port on the map for us. Potential strikes in the offing. What is the hit to trade and the supply chain, Lizzie?
Well, Tom, to give you a sense of the trade that passes through this port, 4 million of those containers pass through it every year. So that's the equivalent of Rotterdam, Europe's main trading hub. And the Russell Group estimates that you'll get $800 million worth of trade affected by this strike. We're on day 2. It's set to last 8 days. You've got almost 2,000 workers striking in this dispute over pay because, of course, we're in a cost of living crisis, double-digit inflation here. In terms of the disruption to supply chains, Maersk has already had to reroute 3 ships. It's looking at another 11 vessels as well. That's going to add delays and costs. The question is how much that gets passed on to consumers. It's mainly affecting furniture, electronics, clothing, and this is at a time when retailers are gearing up for Christmas, dare I mention that, in August, but it's true. And so speaking to port bosses, they say that they're able to weather this storm. They've been through the disruption of COVID and Brexit, but the reality is it depends on how many workers cross the picket line and are able to keep the port running, really.
Yeah, 125 days, I am assured, until Christmas. What's the likely economic impact, Lizzie?
Well, it's difficult to put a number on it, but this is only going to add to inflation when you're adding to the delays. And there's another side to this, which is the risk of a wage price spiral. It's not just the dockers in Felixstowe striking, it's also the dockers in Liverpool, the postal workers, transport workers, and the risk is that the unions add to the inflation that they're trying to shield their members from.
Lizzie, thanks so much. Lizzie Burden there in Felixstowe. Have you ever played the container game where you kind of sit on the dock and then guess with your children?
Oh, this is one of your
partner
favourites, isn't it?
About what could be inside the container.
I need to do that in the next one. Next time we're at Long Beach.
It'd be like, you know, what's the price on a container? That's it for the European Market Open. Surveillance, Early Edition is up next. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
It was taken as almost axiomatic 6 months or a year ago that at some point the Chinese economy would surpass the American economy in terms of total GDP at market exchange rates. That's now much less clear.
The last 10 years certainly have been bad, very bad for the bank, but you look at the situation today, trades at less than a third of book value.
No.
It still has a robust private wealth business. All they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
With high interest rates and high inflation, we are still going strong. Also with the prices of energy skyrocketing, especially in Europe, we have not seen any slowdown yet.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Sentiment restrained, stocks in the red as investors look ahead to Jackson Hole. China cuts its benchmark lending rate to support the economy. The Credit Suisse shuffle, while the embattled Swiss lender brings in a new finance chief, pushing ahead with its major revamp, plus summer of discontent. Strikes at the UK's biggest container port are set to upend supply chains. We're live on the ground in Felixstowe. Now, first thing is first, so let's check on the markets. This is the picture overall. A lot of focus, of course, on that all-important Jackson Hole speech by Jay Powell. That will be on Friday. Stocks in Europe retreating. U.S. futures also down. Again, because of the Fed's commitment to tighter monetary settings, that's restraining investor sentiment. European stocks down 1%. Look at that. Euro-dollar 0.9998. Now, the last time we had, I think, 9995 was in July, and we hadn't seen that for over a decade. This is a story of dollar strength, yes, but also of euro weakness because of all of the price swings when it comes to energy, certainly everywhere in Europe, but also especially in Germany. The S&P 500 futures down 1%, then Bitcoin 21,052. Now, if we look at the European map, and again, the euro dollar is extremely significant, especially for further ECB monetary policy. So let's look at the map. I think we have it. So there you go. You can see a sea of red with a lot of course, the things we're looking at, including some of the sectors. So look out for the difference between what we're seeing in the DAX, for example, in Germany, and what we're seeing here in the UK. Now, let's discuss Jackson Hole. Central bank watchers will be following the Kansas City Fed's economic symposium this week for clues on the U.S. rate path. Currently, there's a standoff resulting from conflicting U.S. economic data. On the one hand, we had a strong jobs report. On the other, a cooler than expected inflation print. Well, joining us now to discuss all of this is Susanna Streeter, Senior Investment and Markets Analyst at Hargreaves Lansdown. We also have Phil Serafino, Bloomberg Senior Editor for EMEA Equity. So thank you both for joining us. Susanna, thank you so much and welcome to the studio.
Thank you very much. It's great to be here.
So what kind of equities are you buying, if anything, ahead of Jackson Hole?
I think it's a very difficult time right now. So much uncertainty. I think that's reflected what we're seeing right now in the equity markets, a bit of treading water going on, trying to work out what the direction of travel will be. You mentioned, of course, all that conflicting data, and I think there really was a sense that because that inflation print came in a little bit lower than expected, there would be this easing off of this monetary tightening. Unfortunately, I think that certainly has been over-optimistic, and that's been reinforced by comments we've had from some Fed policymakers. So certainly, for now,
really
I think
important that Jackson Hole, Jay Powell. Right,
oh yeah,
on Friday.
Absolutely, yeah, really important because I think there's a real need for some more clarity, really, on what we should expect in the time ahead. At the time when, of course, the cost of living crisis is biting for so many people, not just here in the UK, it's particularly bad, but also in the States as well. And you've got those retail latest results showing that actually even middle classes are trading down.
So, Phil, what are you expecting from Jackson Hole?
Well, I think Susanna's right. The market has been treading water. And, you know, it's unclear what kind of signals the Fed is going to give, Jerome Powell is going to give at that meeting. But investors want some sort of signal. You know, the market is priced in sort of the perfect scenario where the Fed doesn't go too far raising interest rates. I mean, investors are going to be hanging on every word. What is the tone? And so that is the first big event for the market. You know, the people are trying to figure out if the rally is for real, and the Fed will be a big sign. And then right after that, you have some economic data in early September. There's a jobs report the first Friday of September, and then there's CPI in the middle of the month, leading up to the Fed, I think, on the 21st of September. So, you know, there's a lot riding now for the market on these next couple of weeks, starting with Jackson Hole.
Yeah, I mean, a lot we'll be writing. What's your take, Phil? And then we'll get back to Susanna on the overall equities picture. But what's your take on earnings? I know they're a little bit backward looking, but can we be really in for crunch time the next quarter?
I mean, the earnings in the second quarter the market was generally very pleased. Companies look like they're managing the inflationary pressures pretty well. Demand does not show signs of hugely tailing off. Again, it is a snapshot. The expectations are that estimates are going to have to come down given the fact that interest rates have gone up so much. That's going to feed through to the economy. It's going to curb consumption, certainly by consumers. So the question is, do earnings hold up well enough over the next couple of quarters to keep the market up at these levels and even send it higher?
Do you worry, Susanna, about second round effects, of course, for energy that we haven't really even looked at yet?
Yeah, absolutely. And of course, there is a lot of talk about the potential impact of the Iran nuclear deal and how that's already been priced in to some extent, partly contributing to the drop in crude prices that we've seen. But obviously, they've been mainly pushed down about fears about the global downturn. But of course, I'm not expecting any kind of deal to take place before the November midterms. So I think, though, that's going to be pushed into next year. Certainly from the European side, there's a lot being pushed there. Given the energy crisis unfolding right across Europe, they really need to try and find some way of ensuring that crude prices aren't as onerous such as gas prices are. So I think that is going to play out in the next few months as well. So there could be certainly some weakness going forward.
And so what does it mean? So when you look at your portfolio, what do you buy with conviction, if anything?
I think it's very difficult. I mean, this is a time when really you need to make sure that you have a very diversified portfolio and no single major big plays, I think, because it's such an uncertain outlook. And I think looking across other asset classes as well to try and give your portfolio a bit of extra ballast, really. So I think certainly when it comes to consumer-focused stocks, I think, as Phil was indicating as well, we may have seen some pretty good earnings. But actually, I think there's going to be much more weakness to come. And although there was optimism actually surrounding those Walmart results, in fact, there was quite a lot of weakness in those figures because there's so much discounting having to be undertaken at the big retailers. And we are getting this trading down. Consumers simply can't afford those discretionary items. Research, particularly for the UK, Hargreaves Lansdown has undertaken financial resilience research with Oxford Economics, shows that next year only 1 in 10 people will actually have the money left over at the end of the month to make those discretionary purchases. And I don't think that's been fully reflected.
That's really interesting. What do you not see fully reflected, Phil, that we could see as we get into the winter months? I don't know whether it's credit card bills or whether it's that pricing power that so far a lot of retailers have been able to pass on.
Yeah, I think just the general inflationary environment is really going to weigh on consumers. Susanna was talking about gas prices. Europe is facing up to a fairly tough winter on the energy supply front, and there's no sign that prices are going to come down too much soon. And it's pretty interesting that consumer discretionary stocks have done very well since the market low in June. So investors are sort of assuming that none of those pressures are going to start to bite on consumers, and it's going to be interesting to see whether the market sort of can thread that needle. A lot of things have to break right for consumers to do well over the next 6 months.
Phil and Susanna, thank you so much. Susanna Streeter, their Senior Investment and Markets Analyst at Hargreaves Lansdown, stays with us, and thanks to our Phil Serafino in Paris. Now, coming up, the summer of discontent continues as workers go on strike at the UK's busiest port. We'll be live on the ground, and this is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
So let's go inside the boardroom. Let's suppose you win a proxy fight or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, First of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what we're looking at in terms of euro-dollar. It did touch parity, below parity actually, something that we've been watching very closely for quite some time. Let's also look at Chinese main interest rates tool. It's a little bit geeky, and that's what we like, especially on a Monday morning at 9:12 UK time. Now, Chinese banks have lowered their benchmark lending rates. The authorities have stepped up support for the property market with additional loans. It's all part of a government-guided attempt at alleviating a worsening housing crisis and bolstering borrowing demand. Now, it did little to actually lift a risk-off sentiment on markets. Investors now counting down the Jackson Hole gathering of central bankers later this week, where they will be on the lookout for any hints about the Fed's tightening plans. Well, we're back with Susanna Streeter, Senior Investments and Markets Analyst at Hargreaves Lansdowne. We have so much to talk about, Susanna. We're all over the place. We're looking at like really geeky Chinese stuff to give us an indication of what policymakers can do, but we also need to talk about euro-dollar parity and the fact that it broke through that. First of all, on China, can they support the world economy?
Well, it's interesting because it's unleashed this round of stimulus in lowering this key lending rate. And in previous attempts, when there has been this kind of level of stimulus, it has, I think, lifted the markets much more, an expectation that China will kind of resume its powerhouse status. But that's certainly happened. And I think that's an indication that the market does expect this underlying weakness in China to continue, partly because of the really struggling property sector with Evergrande and other major corporations still really teetering despite all the efforts to try and kind of buy off chunks, for example. And also, interestingly, I saw like Burberry share price hadn't really moved much. Of course, Burberry highly reliant on consumer sentiment in China as well. So I think certainly for now, that uncertainty on China will continue.
But I mean, investors just want more, right, from policymakers in terms of support to the economy. Last week or 10 days ago, we had that token support. Are you expecting them to do much more?
I think they will do much more, yes, certainly going forward. And we've seen that in the past. I certainly do think that we'll continue to see that in a kind of incremental approach going forward.
All right, I have a million questions. We did have a really great China data start. I think it's like 2 standard deviation in terms of what we've seen in terms of ratio. Let me get on to the UK. I mean, I don't know what to do with the UK right now. We've seen some, great stories, including from our Valerie Teitel, saying a lot of the currencies are actually behaving like emerging markets currencies.
Well, I think the sweltering summer of strikes is turning into a very awful autumn and looks set to be a bit of a winter of woe, certainly for the UK, because we ain't seen nothing yet in terms of the rises in energy bills, up to £3,500 in the autumn. Forecast it could rise to £6,000. Now, that is so high. So many households are going to really struggle, and that is going to have a real impact, I think, on earnings, the consumer sector in particular, going forward. I think it's going to be so tough. And of course, we still have this uncertainty surrounding energy security, not just in the UK but across Europe as well, which is partly why, you mentioned the euro-dollar parity. I think that's why you're seeing continued weakness in the eurozone because of fears about whether Germany can cope if gas supplies are turned down even further.
But Susanna, when you look at the UK, and we're talking about energy poverty, right? And what you're pointing to is households not being able to repay bills. I mean, it's a scenario that has been highlighted by the Bank of England. Is it going to be worse than what they think? And again, what does it mean for an investor?
I think the danger is we've got this groundswell, this campaign to ditch the direct debits. So more than 1 million people vowing not to pay their direct debits because they can't afford their energy bills. Now that could have a knock-on effect in terms of credit risk. That could compound the issue because they have to pay more for any kind of borrowing going forward. So this individual crisis could end up causing much further pain, deeper pain going forward.
So as an investor, do you not touch the UK or do you wait and see what the winter
brings? Certainly, FTSE 100 has proved remarkably resilient because of its makeup, energy financials, for example. There will be, I think, certain companies that are going to fare worse than others, but there is still, underlying strengths in some. You've got the health tech sector, for example, and the health sector in terms of, say, PHP properties, leasing doctors and surgeries, and there is going to be some stocks that are going to be resilient. And I think perhaps searching for income-generating stocks might be the way ahead to find that stability in the UK market.
Susanna, thank you so much for joining us today. Susanna Streeter, they're a senior investment and markets analyst at Hargreaves Lansdowne. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. About 2,000 dockers at the port of Felixstowe in eastern England have started an 8-day strike, halting the flow of goods through the UK's largest container gateway. Workers are unhappy at the port owner's offer of an average pay rise of some 7%. Felixstowe handles about a third of Britain's total container volume. Now, a senior diplomat is reported to say that Russia does not see a diplomatic solution to the war in Ukraine and expects a long battle. Meanwhile, Moscow is investigating a car bomb that killed the daughter of a Russian nationalist who had herself been sanctioned by both the US and the UK. The bombing comes ahead of this week's 6-month anniversary of Putin's invasion of Ukraine. In China, the province of Sichuan is extending industrial power cuts as a heatwave persists. Officials say blistering temperatures and surging demand for air conditioning have caused gaps in generation. Companies, including Toyota, have already suspended operations in the region for several days. The power shortage adds another challenge to companies already contending with the country's COVID-0 strategy. And Singapore is repealing a colonial-era law that criminalises sex between men. The country's Prime Minister says removing the legal ban is the right thing to do and something that most Singaporeans will now accept. Lee stopped short of recognising same-sex unions, adding that the constitution will be amended to protect the definition of marriage as being between a man and a woman. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thanks so much, Leanne. Coming up, but turning to nuclear as the energy crisis is set to deepen, Germany is considering alternatives to cover the gap left by Russian gas cuts. More on that next. And this is Bloomberg.
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority. Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's focus on Germany now. And the country may not be able to replace all of its imports of Russian natural gas this winter and might actually have to resort to nuclear power to plug part of the gap. Europe is in the middle of its worst energy crisis for decades, of course, which has fueled inflation and put nations at the brink of a recession. Now that's forcing politicians to look at all alternative available. Now with Europe in the middle of this crisis, let's go straight to Birgit Jennen, who's our bureau chief over in Berlin. Birgit, great to have you on the program yet again. First of all, what kind of alternatives has Germany found?
Well, the problem is that Germany has not yet found really an alternative. They are in talks with Canada, they have been in talks with Qatar and in talks with Norway. And all of these government and countries say that at the moment they're not ready really to supply extra energy. Norway can't, is at the maximum of its gas production. Canada has problems domestically because it would mean a turnaround in their ecological policy. And Qatar is really playing hardball. We hear sort of with people who are negotiating with them. So really it is a problem, and therefore the government is really looking at any way how to basically produce some more energy for the winter. And for that reason they are looking at something that they have never considered in the past, keeping sort of 3 nuclear plants running at least for a while. And they are doing at the moment research, which the result is expected at the end of the month.
So, Birgit, what does it mean for the cost of living? How tough is it for German households right now?
We do obviously see that already the prices are rising, but I think the consumers haven't yet actually experienced the real brunt of it. This is going to come over the next month when basically the surcharge which is being introduced is going to hit. It goes up to 500 euros per household, which is a lot for particular low-income earners as well. So on top, there are already the existing energy price rises. So it really hits particularly Scholz's electorate, and that is likely to become an issue, a political issue for him also over the coming month.
Yeah, and his popularity, Birgit, is really waning. Are you surprised at how fast it's waning?
I do think it was expected. We do see massive changes going through in Germany. I mean, and even before the election, he actually had also very often very low popularity rates. So really that there was the risk that whenever there is a crisis in Germany, that maybe the population, the electorate is going to look at alternatives and is looking at the CDU especially at the moment. That was to be expected. But what it means for Scholz is really that he now has to make sure that his own party is staying together, because if not, then he really needs to turn inwards and cannot play the foreign policy role he has been playing so far.
Certainly, Birgit. Thank you so much, Birgit Jennen there from Berlin. This is Bloomberg.
CZ ฟิล์มติดฟิล์มรถยนต์เกรดพรีเมียมโดยช่างประสบการณ์สูงปรึกษาฟรี
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
I'm going to be watching retail earnings from both Home Depot and Walmart.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Elisa Abrambitz, I'm Jonathan Ferro.
Across the board, these are good numbers.
And a big headline there is reaffirming the outlook.
How much does this give faith that you can get some sort of resurgence in consumer spending?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Ferro. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Sentiment restrained. Stocks in the red as investors look ahead to Jackson Hole. China cut its benchmark lending rate to support the economy. Well, the Credit Suisse shuffle. The embattled Swiss lender brings in a new finance chief, pushing ahead with its major revamp. Plus, summer of discontent. Strikes at the UK's biggest container port are set to upend supply chains. We're live on the ground in Felixstowe. Well, good morning and welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacroix here in London. Now, Britain's summer has already been punctuated by scenes of travel chaos, and there's more to come. Workers at the country's largest container shipping port, Felixstowe, have joined the list of those on strike. Now, for more, we're joined by Lizzie Burden, who's in Felixstowe for us. Lizzie, what a shot behind you. I mean, I don't know how many containers you can count, but it really captures the imagination of so many people around us. How will this disrupt trade? Well, Francine, about 4 million containers pass through this port every year. So that gives you an idea of the scale of the trade that happens here. And this is the UK's biggest container port. Now, 2,000 workers are striking for 8 days. It's day 2 over this dispute on pay because we've got double-digit inflation in the UK and the port isn't offering that in terms of the pay rise to its workers. In terms of the disruption, the Russell Group says about $800 million worth of trade will be affected. It's lots of clothing, furniture, electronics, just as retailers are gearing up for Christmas. Flexport says it's going to take 24 days to clear the backlog of cargo. But the port says they've been through COVID, they've been through Brexit, they're going to be able to mitigate this disruption, but really they're not going to know how bad it'll be until they see how many workers cross the picket line. So how long are we expecting the strikes to last, Lizzie, and what's the likely economic impact of that? Well, speaking to workers in the area, it's incredibly difficult to decide not to go to work when it is a cost of living crisis. They're giving up their full wages. And so the port will be hoping that many of them crumble, cross the picket line and the strike breaks down. It's difficult to tell what's going on in the negotiations behind the scenes. But of course, it isn't just Felixstowe dockers who are striking. It's also the Liverpool dockers. It's also transport workers, postal workers, barristers, and so the risk is that the unions add to the wage price spiral that they're trying to shield their workers from in terms of the inflationary impact. But speaking to port officials here, they're very frustrated because they feel like they've been targeted by the unions to send a message when it comes to employers around the country in terms of giving bigger pay rises because of the crisis. Lizzie, thank you so much. Lizzie Burden there in picturesque Felixstowe, and you can hear the seagulls in the background. Now we're joined by Richard Ballantyne. He's Chief Executive of the British Ports Association. Richard, thank you so much for joining us. When are you expecting this to last and still? How many more strikes for how many days?
Well, hello, and thanks for inviting me on, and sorry that it's in these circumstances that I'm asked to comment. I think, in short, we don't know. I mean, obviously, this particular strike is scheduled for 7 days, but there is a possibility that there could be, further strike action, although that is a matter for the union, of course, who'll be in discussion with the employers of Felixstowe.
Richard, what does this mean for the overall economic activity in the UK? How much disruption are you expecting from the strikes called so far?
Yes, it is a kind of issue for the logistics industry and the freight industry and the shipping sector here in the UK. As Lizzie mentioned, Felixstowe is the UK's largest container port. But we do have other ports, so they'll help to pick up some of that slack. Freight will be rerouted through places like Southampton and London and elsewhere, etc. The ships, that is more difficult. So I would imagine that those vessels might be less fully loaded, but they will be waiting to come into Harwich and Felixstowe as they normally do, and then turning around, continuing their journeys. The issue is if you do reroute freight away from its traditional travel plans, etc., there will be a cost, and those costs will be passed on to importers, traders, and potentially ultimately consumers.
Well, how much, Richard, of that cost? Do you have any kind of ballpark idea of how much more expensive this means for the workings of British ports, and how much of that is not only put to some of the consumers but also some of the companies using your services?
No, unfortunately, that would be a question better suited to the wider logistics industry. I saw the Russell Group study previously, which seemed quite extreme, I have to say. But they obviously have worked out their numbers using their own formulas, etc. So I think it's a question better suited for them and people in the logistics industry.
Richard, give me a sense of how bad it is right at the moment for some of the port workers. Like, what are you looking at for the next 6 months? So how much are you expecting energy bills to go up? Like, what kind of metrics or numbers are you looking at?
Well, we're just like the rest of the population here in the UK. We're watching what politicians say. We're watching what energy companies say. And we are looking at those increased bills just as everyone is. And, of course, port companies will be facing increased costs as well, not just the employees, but do sympathise with those employees. I think it'd be wrong for me to get drawn into the discussion between Felixstowe and its own workers. That's a matter for them to alleviate, to sort out. I don't represent either party, so I think it's better for me not to be drawn into that debate specifically.
Right, but of course, I mean, the worry is that this upends some of the supply chains. I don't know whether you've also had discussions about what it means for insurance, for example, things like that. Like, what do you see us looking at in terms of British ports mid-September?
Well, everybody will be affected by the cost of living crisis, and you mentioned insurance and the financial services sector. I think it's safe to say a lot of the industries here in the UK will be looking at the impacts of inflation and the cost of living crisis, etc. So I would say it's more of the same to come. I'm not sure about strike action. Some ports have already negotiated deals earlier this year. Others will be working towards the end of the year. So we have to just wait and see how far the impact is across the ports industry. But we do have a very diverse and varied ports industry here in the UK with a number of different ports and operators. So it is a big sector for us here.
Richard, thanks so much. Richard Ballantyne there, Chief Executive of the British Ports Association. Now, we're also joined by Josie Dent, Managing Economist at the Centre for Economics and Business Research. Thank you, Josie, for joining us. We're looking at some of the supply chain disruptions. Of course, we're in Felixstowe, one of the biggest. I mean, I think Lizzie was saying some 4 million containers are shipped in and out every year. How much of an impact will this have on the UK economy?
So we can look at this from a few different angles. Of course, we have the immediate supply chain issues of supermarkets, retailers, all sorts of businesses not being able to get the produce they need right now, which will have knock-on effects on their supply chains if they don't have the inputs they need for their production. And then we have the element of the negotiated pay rise. All that workers are asking for is an inflationary matching increase in wages. But the concern across the UK with these strikes, with industrial action, is that we'll end up with some kind of wage price spiral where wages increase to match inflation, and then that causes inflation to increase itself through higher demand. And then if we see knock-on impacts in terms of higher prices, because as we discussed earlier, ships have to be rerouted, and that costs more money, then we are seeing a direct inflationary impact.
Josie, give me a sense of the estimate. So with every, we're looking at rail strikes, we're looking at supply chain, of course, disruption because of port strikes. With every day of strike, how do you model how much of a hit the economy has?
So, I mean, if we turn to rail strikes, we have modelled a cost estimate for that. And for the rail strikes last week, the 3 days that we saw, we estimated that will cost the UK economy £65.3 million. And that's about a 0.01 percentage point decrease of the Q3 growth figure that we're forecasting. So it is substantial enough to affect overall growth, but not in a major way. Similarly, these port strikes will have an effect that will be in the multi-millions. We haven't yet estimated it. It's quite difficult to do, especially with a lot of uncertainty currently about how long this strike will last. But it will be substantial, especially if it leads to further price increases, which leads to further inflation, which has knock-on impacts on the cost of living crisis, which is the main factor having downward pressure on the UK economy and UK growth right now.
So, Josie, at some point, there's what of course economists call a wage price spiral, where it's completely out of control because everyone's asking for a wage increase to match up with the cost of living. Are we there yet?
I wouldn't say we're there yet, no. I mean, the latest labour market data shows that there's around a 3% real wage contraction for the average worker. So wages are not growing as quickly as inflation. And that is, of course, why we have a cost of living crisis. The UK in general is not that unionised. Most people can't strike. And so most people are actually just experiencing slower wage growth than inflation. And it's a few different industries that have striked, but for the most part, people aren't seeing wages increase as fast as inflation. It's when this becomes a longer term issue with inflation, if it stays high for a very long time, then we could see that kind of spiral.
Josie, how problematic is weaker pound?
So that itself can be a source of inflation and is a big concern for the Bank of England at the moment. With a weak pound, imported products become more expensive, and we do import a lot in the UK. And so if the pound becomes weaker and weaker, then that will drive up the prices of many different goods that we import from other countries. And so that's a reason for the Bank of England to continue increasing interest rates, not just to affect demand in this country, which then influences inflation, but to influence global forex exchange, and so that we don't see the pound depreciate too much versus countries that we're importing from.
Josie, thank you so much. Josie, they're managing economist at the Center for Economics and Business Research. Now, coming up, we focus on Credit Suisse as the bank names a new CFO, and staff are also anticipating deep cuts from the latest emergency restructuring. While we focus in on the troubled Swiss lender, that's coming up next, and this is Bloomberg.
CZ ฟิล์มบริการติดฟิล์มรถยนต์ 3M รามิน่ามาตรฐานสูงทดสอบฟิล์มฟรี
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Credit Suisse has continued its shakeup at the top management, introducing Deutsche Bank's Dixit Joshi as its new CFO while promoting a new chief operating officer. Well, today's Big Take takes a deep dive into the Swiss lender's emergency restructuring, which also likely delivered deep cuts as well, potentially signaling the end of the lender's ambitions to be a Wall Street titan. Now, well, David Harrow of Harris Associates told us last week it might not be all doom and gloom for Credit Suisse.
This has been a problem child. We've owned this bank literally since early 2001. And the first 10 years was a very good holding. I mean, it literally went from 20 to 60 or 70. Now, what we should have done is just sold it and that's it. But of course, during the financial crisis, they actually performed better than most other banks. And we increased our position again and had a very, very poor decade holding Credit Suisse as they've kind of hobbled from one crisis to the next. So what's the situation today? The last 10 years certainly have been bad, very bad for the bank, but you look at the situation today, it trades at less than a third of book value.
Yeah.
It still has a robust private wealth business. I mean, they have 4 businesses, one of which is absorbing the profits of all the other 3. And all they have to do, really, it sounds simple, but all they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
What would you do with it? Would you spin it off?
If they cannot fix it, if they cannot find a way for the investment bank to earn through cycle returns, they have to do something with it. Whether it's spin it, sell it, merge it. But at this stage, the price of Credit Suisse stock assumes roughly a 10 to 15 billion negative on the investment bank. And if they can repair the investment bank, make it such that it can earn through cycle profits, clearly it's worth more than negative 15 billion.
David, how much time should they try and fix it before they sell it, or spin it off, or do something with it?
Well, certainly in the next year or two, this has to be decided, but you can't keep doing the same thing as they've been doing over the last decade and get 0 results. They have to put an end to it. At some point, they either have to fix it or to look for other options.
Well, that was David Hare of Harris Associates that has around 10% of Credit Suisse, the largest shareholder by far. Now, joining us now is Bloomberg's Miriam Belezu in Zurich. Miriam, how big of a shakeup of the investment bank are we actually expecting?
Well, Francine, I think it will be a significant change that is coming for the IB here. It will be significantly diminished. They are currently looking at all options. Everything's on the table. But we're hearing that in extreme scenarios, it could get to 2/3 of the banks getting torched. So quite a change.
That's a lot. So how quickly can we expect that, Miriam?
Well, it's still undecided. The timing's not extra clear. However, the banks indicated that they'll give some sort of clarity on how it's likely to look like by the end of Q3. So by the end of October, we should have a bit more clarity over how the shakeups are likely to look like.
So, Miriam, through all of your great reporting, what do you find most surprising, actually, with Credit Suisse? That it can attract still top talent, or that it's just going to not want to become a Wall Street titan when it comes to the investment bank?
I think it's still, IB is still at the core of the company, and just looking at Credit Suisse's history for investment banking, just a decade ago, they were in top 5 competing against Wall Street. And I think this is something that's still kind of paramount to the bank. However, we cannot just ignore the fact that it's very hard to attract talent just broadly across Wall Street, but let alone with the situation that Credit Suisse is currently in. And obviously, talent retention's been a big topic, and particularly the compensation package they've been handed out to a lot of their senior bankers just to retain talent. And I think this is going to be the biggest challenge for the bank this year, because no matter how big the bonuses are, really the reputational damage will start to kind of trickle down to all of the people within the banks. So I think this is the main challenge for the bank, retaining their core staff and also just providing some form of stability. We've seen new management changes again today. So.
Yeah, it certainly feels like that will definitely be their biggest challenge. Miriam, thank you so much. Miriam Belezu there in Zurich. Now, you can read more online or on the terminal by typing NI Big Take. Now, coming up, we'll bring you full coverage of all the news from Jackson Hole, that big speech, of course, on Friday by Jay Powell. We also get euro-dollar touching parity, below parity. What happens next for euro-dollar? This is Bloomberg.
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, All roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
ติดฟิล์มรถยนต์ CZ Nano Ceramic กันร้อนสูง 84% ประกัน 8 ปี
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with a plan.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming through?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Bloomberg Green, bringing you the business, data, and innovators fighting climate change. Reinventing climate news on TV, Quick Take, and Bloomberg.com.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquay here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. Chinese banks have lowered their benchmark lending rate while authorities stepped up support for the property market with additional loans. The 5-year loan prime rate to reference for mortgages was reduced by 15 basis points to 4.3% after being cut by the same amount in May. This as Beijing battles a worsening housing crisis. It's reported members of the UK's Criminal Bar Association have voted overwhelmingly to begin permanent strike action from next month. Court cases have already been disrupted in the pay dispute by criminal lawyers. A permanent strike could see legal cases postponed or even collapsing. United Health, Amazon, CVS Health and Option Care Health are said to be among the bidders for US company Signify Health. Sources tell Bloomberg that United Health has submitted the biggest bid in excess of $30 a share, while Amazon's offer is just close behind that. Signify is holding a board meeting today to discuss those offers. And the debut of the prequel to Game of Thrones has overwhelmed the HBO Max streaming service in the US. More than 3,000 outages were reported across the platform at 9 p.m. New York time. Just as The House of Dragon was released, the new series premiered more than 3 years after the last last episode of Game of Thrones, which drew more than 19 million viewers. And that's your Bloomberg Business Flash. Francie.
I will 100% watch that. Just because it's crashed, Leanne, when it crashes, it means it's good. It's like going into a busy restaurant. You never go into an empty restaurant, even if it means queuing for like 2 hours.
Well, Francine, when Stranger Things debuted on Netflix, that also crashed. I've never watched Game of Thrones, but I think I should now because it crashed. Like you said, it just draws attention to the whole series, doesn't it?
It certainly doesn't. There was also our Sarah Rappaport wrote a great review, which got everyone quite excited in the newsroom. Leanne Guerin's there with your top stories. Thank you so much. If you look at European stocks, but also U.S. futures, a little bit of a downward movement. That this is as they watch to Jackson Hole and that all-important speech by Jay Powell. That's on Friday. So stocks in Europe definitely retreating. I think we have the board up. If we do, we can bring it up. There you go. Now, we also look at euro dollar, one of the biggest or the easiest way, I guess, to look at some of the angst that we're seeing out there. The dollar spot climbing to a 5-week high. Euro, quite a lot of pressure for euro because of what we're seeing with gas price and energy prices in Germany. Now, the latest MLive Pulse survey also suggests that stocks and bonds are set to tumble once more, even though inflation has likely peaked. A Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kaylee Lyons in New York. Anna Edwards back in London. This is
CZ ฟิล์มบริการติดฟิล์มรถยนต์ 3M รามิน่ามาตรฐานสูงทดสอบฟิล์มฟรี
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
McDonald's is more than 60 years old now.
Yeah.
What is it that made McDonald's by far the biggest of the fast food companies?
I think it starts with the brand. I mean, we have a brand that is one of the most valuable brands in the world. It started with, I think Ray Kroc recognized the importance of ubiquity. And so that was part of the genius or genesis of doing a franchise model, because with a franchise model, he could get capital deployed, get restaurants built more quickly than he could if he was trying to do this all on his own.
There's been a greater interest in the United States and maybe around the world in healthier eating.
Yeah.
Have you tried to reflect that in your menu?
I'd say, you know, what we try to do on our menu is to have choice. So we have a variety of things on our menu, from more indulgent items to, you know, healthier items. And, you know, it gets back to, again, what sells gets on the menu and stays on the menu. What we have seen consistently is, as we've tried to broaden more of what, you know, people might say are better for you items, there's just not as strong a demand for them as there are for some of our iconic classics. And so, you know, we're not in the business of telling people what they should or shouldn't eat. Our view is our obligation is to provide them with total transparency on nutritional information to make sure that we afford them choice, but ultimately what the consumer buys is up to them.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
the U.S. doesn't really need to be on an improving growth trajectory. All that needs to happen for the dollar to strengthen is for the rest of the world to do poorly.
I think we're going to remain strong at least for the next 6 months.
If you look at how the market is evolving, it's trying to build a sense of confidence.
When we look at the economic conditions and the market conditions in front of us, it leads us to a more cautious place.
It's not really the time to be taking big absolute directional bets.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. China tries to fix a worsening housing crisis. Banks lower their benchmark lending rates while the government steps up support for the property markets. Walkout. 2,000 dock workers began an 8-day strike at the UK's busiest container port. They rejected a contract offer as inadequate. And a shake-up at Credit Suisse. There will be a new CFO and operations chief. All this as the Swiss lender prepares for a major restructuring of its struggling investment bank. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. And Kaylee, I can report nothing but deteriorating sentiments the longer the session continues here in Europe.
Yeah, and it has started really in the Asian trading session overnight, Anna, in which basically every single equity benchmark was lower, the one exception being China, which I'll mention in just a moment. But clearly, risk-off sentiment is prevailing. The MSCI Asia Pacific Index was down for a third day in a row, losses of a little more than 0.5%. But as I said, China the exception after those banks cut the 5-year and 1-year loan prime rates, and really additional support coming in for the property sector in the form of loans. So that raised Chinese property stocks in particular, which gained about 1% overnight. What's interesting, though, is that as China eases policy, basically every other central bank is tightening policy, and that includes New Zealand, where the central bank overnight said they may need to raise rates to 4.25% in order to rein in inflation. And you saw an immediate reaction in the New Zealand bond market, that 10-year yield climbing 14 basis points to right at that 370 level. And finally, in foreign exchange, the big underperformer in Asia on the day is the South Korean won, actually hitting a fresh 13-year low against the U.S. dollar, trading right just south of 1340. That in part is due to weak trade data, but also it's just that basically every single Asian currency, or really every currency across the board, is weaker against the dollar today. Kriti, really speaks to the risk-off tone in these markets.
Yeah, but that dollar strength, I think, is really what you're starting to see cross-asset, at least here stateside. Real specifically when you're looking at the futures, we were talking about that deteriorating sentiment in Asia and Europe. Well, showing up in the United States as well in the futures action, but a lot of it, once again, that inverse correlation between the dollar and the stock market, it is still strong. So keep an eye on that. It's not just about the currencies, not just about the commodities. It is actively affecting just how much kind of courage investors have to hop into the U.S. market in a risk-off market. Remember, the U.S. tends to outperform, but not in the face of that stronger dollar. So, of course, we see futures down about 1.2%. And the U.S. 10-year really unchanged here at 297. But if you look at that intraday volatility, that's what you want to keep an eye on, because really you have seen a little bit of choppy action throughout that Asia session. The dollar, like I said, already stronger. But when we talk about risk-off, we got to talk about Bitcoin. That risk-off sentiment really magnified through that cryptocurrency, Anna.
Yeah, risk-off sentiment really magnified here by the extensive red that we have on the European map this morning then, Chrissy. So as I mentioned to Kaylee, sentiment just deteriorating as the longer we go through the European session. We have higher gas prices, we have a weaker euro, all that adding up to a much weaker picture for risk assets. The FTSE down by 0.6%, but that's nothing compared to the CAC down by 1.7%, the DAX down by 1.8%. That's the graphics, that's the way this looks geographically across Europe. Let's have a look at some of the key dynamics, the key players, the key assets on the move, if you like. And it doesn't matter if you price it in pounds per therm or euros per megawatt hour. We see higher gas prices across Europe today. These are the benchmarks in the UK and in Europe, and they're both on the rise. And those percentage moves are just the prices going higher today. We've already seen a 14-fold increase in German power prices now compared to the 5 years that were before this year, so pre-2022. And we are seeing now Germany thinking about using more coal, extending the life of its nuclear power plants, looking at all kinds of options to try and shore up supplies of energy. And the thing that has driven this big move today is Russia saying it needs another 3 days of maintenance on the Nord Stream pipeline at the end of this month. That once again triggers concerns about whether those taps will be turned back on. That's weighing on the euro. We dropped below parity. We're back above it now, 1.0013. But we did drop below parity, and we did have, I was reading a note earlier from Nomura talking about the possibility of blackouts during the winter in Europe, and that is obviously something that's going to weigh on the currency. I put in here one corporate story as well, Kaylee, because this is of interest. This is a company that's listed in London, but just just under 70% of their revenues come from the US. It also operates the Regal chain of movie theaters over in the United States. They may file for Chapter 11 bankruptcy. They're dealing with a big debt pile because of the pandemic and also because they were about to make a bid, or they made a bid for a Canadian company that they didn't end up buying but have a fee to pay as a result, Kaylee.
Yeah, that stock was down 58% in Friday's session, which is really quite remarkable. Of course, that is what happened last week. Let's take a look forward now at what is coming this week. UK Foreign Secretary Liz Truss and former Chancellor Rishi Sunak are campaigning today in Birmingham as they vie to be the country's next prime minister. Plus, with politics here in the U.S., primary elections will be held in Florida and New York on Tuesday. Plus, retail earnings keep rolling in with Macy's set to report results. Russia's war in Ukraine will be hitting the 6-month mark on Wednesday, if you can believe it. It has been half a year already. Then on Thursday, Kansas City Fed's annual economic policy symposium kicks off in Jackson Hole, Wyoming. Of course, we'll have live coverage from there with the surveillance team as well as Michael McKee. And the big event will be Friday, Creedy, when Chairman Powell takes the podium in Wyoming.
And really the conversation there is all about just how much further can the Fed really hike as we start to see looser financial conditions. A completely different story across the Pacific in China. China making another attempt to alleviate the growing housing crisis and bolster borrowing demand. Chinese banks lowered lending rates while authorities stepped up support for the property market with additional loans. Enda Curran, our Bloomberg chief Asia economics correspondent, joins us now. And it's interesting to see this divergence between the United States and China right now when it comes to the policy front. How quickly could this become a dangerous move?
Well, we had two new developments today. On the one hand, banks said they will bring down their 5-year lending rates by more than expected, by 15 basis points. Clearly, that will bring mortgage rates lower. That is going in the opposite direction to the US, like you mentioned. It will, of course, perhaps help demand for loans at the margins in China. On the other side, by the way, today, the government said they will make loans available to those property developers who need finance to finish off unfinished property developments. So when you take it together, it speaks to a new urgency among the government to try and fix China's housing slump. It will add some support to that sector, but nobody's saying this is a turnaround for China's economy. More support will be needed, and it is a deepening divergence with the Federal Reserve.
And a lot of other central banks as well. Bloomberg's Enda Curran, thank you so much. Of course, central banks in Europe dealing with an energy crisis as natural gas prices are surging once again on fears that planned maintenance on the Nord Stream pipeline may lead to a prolonged supply halt. Bloomberg's Danny Berger joins us now and is taking a look at the moves, which, Danny, may be no surprise, but they're huge today.
Yeah, gigantic, and it's not the first time we've seen gigantic moves or had this fear that with the maintenance, it would be used as an excuse for Russia to completely halt that energy, that nat gas flow, or severely curtail it. Of course, it's already curtailed. So we see this big jump in nat gas futures. If you were to price Dutch front-month futures the same way you price oil, this would be the equivalent of around $500 a barrel. All of that feeds into what power prices we're paying here in Europe, and that also means record power prices in Germany, at one point jumping 20% today. Now, the German government has already talked about trying to reduce gas usage by 20% and said that if Russia stops flows, they would not have enough gas for the winter. So what does this mean? Higher prices for nat gas means industry shuts down in Germany. That means the major exporter of Europe also shuts down. That means current accounts start to deteriorate, narrow. All of that means a weaker euro. We saw the euro do just that this morning. It continues to, at one point, piercing below parity. It is just above it at this moment. Anna, you pointed it out. 10013 is where we stand on the euro. But of course, things could continue to get worse if we continue to see industry shut down in an inflation spiral that is truly out of the central bank's hands.
Right, yeah, more details there from Danny Berger. Thanks, Danny, for that. Bloomberg's Danny Berger on the energy markets and the knock-on impact on FX that is having. Now, Britain's summer has already been punctuated by scenes of travel chaos, and there's more to come. Workers at the country's largest container shipping port, Felixstowe, have joined the list of those on strike. So this is a different kind of travel for containers. For more, let's get now to Bloomberg's Lizzie Burden, who joins us from Felixstowe. This on the east coast of England then, Lizzie, a really busy port when it comes to imports from Asia. What's the latest?
Yes, Anna, this is a symbolic moment in the UK's summer of strikes because Britain's biggest container port is Felixstowe. As you can see behind me, about 4 million of those containers pass through this port every year. And so the Russell Group estimates that the 8 days of strike action are going to cost about $800 million worth of affected trade. That's electronics, clothes, furniture, all when retailers are gearing up for Christmas. Flexport says it's going to take 24 days to clear the backlog. Now, you could say, yes, shippers can reroute. Maersk has already redirected 3 ships. It's monitoring 11 more, but that's going to add to costs and time delays. Now, yes, disruption is the point of a strike. The union has rejected a pay offer that wasn't quite as high as the 10.1% CPI that we're seeing in the UK now. The port says that's too high to expect because this pay offer has to deal with the whole of 2022. Inflation's only just tipped into double digits. But the unions are making a point. It's not just the dockers at Felixstowe who are striking, it's also dockers at Liverpool, it's transport workers generally, nurses, barristers. The risk, though, is that the unions, through a wage price spiral, add to the inflation that they're trying to protect their members from.
Lizzie Burden in Felixstowe, we thank you as always for that really crucial update coming out of the UK. Let's bring it back to the States here. President Biden has spoken with European leaders looking to revive a nuclear deal with Iran. The U.S. is considering a response to Tehran's position on the latest proposal and wants to calm fears in Israel about a possible deal. That, according to Axios. Anne-Marie Hordern, our Bloomberg Washington correspondent, joins us now right here on set in New York this morning. Walk us through the details of the deal.
Well, right now, this call, we don't have a ton of details about the call. And the deal, the United States has plays their cards very close. So they're not saying what the response is going to be. All we know is that the Europeans say that it was constructive. So we still don't know how the United States is going to respond. Potentially, this call was to quell some of those concerns with Middle East allies like Israel, who are starting to panic a little bit that maybe a deal will be close. But I don't think we could say a deal is close just yet, because the Iranians were supposed to maybe sign off on this text, and it sounded like they gave responses. So it does seem like there's still a lot of negotiating to go down the line.
Well, and there's been a lot of negotiating that's happened already. They've been trying to reach a new deal for some time now, and yet it seems that the continual things standing in the way are the same things that always have, long-standing hurdles that are still there.
And Goldman Sachs says maybe just this state of negotiation in itself is mutually beneficial for both sides. The biggest issues are going to be what the Iranians want is the U.S. to put this ironclad, that if a new administration comes in, if it's Republican, they cannot withdraw. And Mohammad Morandi, this Iranian who's on the nuclear deal talks, says that the U.S. needs to pay a price if they pull out. So they want to make it really difficult for the United States to pull out. The other big hurdle that has always been in the way, but there's been reports that potentially Iran has started to back away from that, is that the Islamic Revolutionary Guard be taken off the terror list. Maybe they've capitulated on that, but they certainly have not capitulated on the fact that they want this to be legal text. So say there's a Republican president, they can't withdraw the way the former president did in 2018.
Okay, yeah, the extent to which you can bind a future administration. Really interesting point there. Bloomberg's Anne-Marie, thank you very much for the update. Now, it is the first big leadership shuffle at Credit Suisse under the new CEO, Ulrich Körner. He's named Deutsche Bank's treasurer, Dixit Joshi, as CFO, and Francesca McDonough has been promoted to operating chief. Körner is trying to turn around Credit Suisse and has promised a restructuring plan for the investment bank by November. Tom Metcalf joins us, Bloomberg finance editor. Tom, what can we read into these changes? It's not the first management reshuffle we've seen at Credit Suisse in recent years.
No, but really interesting, and I think particularly the appointment of the CFO is a bit of a coup for the banks. They're very well regarded, and I'm sure they're probably quite happy as someone sort of seen as a safe pair of hands they're able to bring in. And the other point from the reshuffle is Francesca McDonough, as you say. She hasn't even started at the bank. She's already been promoted, so now she's COO.
Was at Bank of Ireland, of course. Talked to her many times.
Exactly. So I think, they're looking to tap that experience, and what's interesting there perhaps is, hey, she is mainly a retail wealth banker by experience. So that's a good sign, again, of where they're looking to focus their attention on.
Tom, what about the investment bank? Has there been any impact on the plans there?
Yeah, we had a really interesting deep dive on sort of the what they're likely to do to it. And I think these appointments won't really impact those plans, which are basically really strip it back, go to advisory-led, cut back on the capital use. So I think, that's going to be led really by the CEO and the chairman. So I think these new appointments are much more in terms of, again, a strong bench of executives in place and hopefully, again, reassuring investors on the sort of retail wealth side of things.
Tom, all right, thank you very much.
Indeed, thank you. And of course, we'll have more, Anna, on that Credit Suisse story. It is the topic of our latest big take as investment bankers expect to draw a dramatic shrinking of their business. So we will be discussing that later this hour. And of course, you can find that on the terminal and on Bloomberg.com. Meanwhile, one other story that caught my eye today, the debut of the prequel to Game of Thrones overwhelms the HBO Max streaming service in the U.S. More than 3,000 outages were reported across the global monitoring service Down Detector at 9 p.m. New York time, just as House of the Dragon was released. The new series premiered more than 3 years after the last episode of Game of Thrones, which drew more than 19 million viewers. I have to say, I myself was one of them. I loved that show. But let's see how that's translating into pre-market trading for Warner Brothers Discovery in early hours. It is down, though it is not necessarily underperforming the broader market, given that futures are pretty dramatically lower today. It's down by about 1%. It is a much bigger decline, though, for one of the favorite meme stocks that maybe is no more, as we're seeing some deflation of that trade. AMC is down 35% in early hours, though that in part may be due to the fact that its preferred stock, APE, is going to be trading on the New York Stock Exchange starting today. And it is a big move higher for one company, Signify. This is a home health company, and Bloomberg reporting overnight that bidders potentially for the company include United Health as well as Amazon. United Health, according to our reporting, set to offer a little more than $30 a share. Amazon's offer apparently pretty close to that, maybe just below. But as a result, the stock is trading at $28.50 a share, up about 34% before the bell, Anna.
Certainly one to watch then, Kaylee. Coming up on the programme, Freya Beamish joins us, head of macro research at CS Lombard. What does she make of inflationary pressures around the world? This is Bloomberg.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
At the start of the internet revolution, I kicked up a lot of controversy declaring that the internet had been underhyped. I say the same thing today about the climate revolution.
Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. We're simulcast on TV and radio. Let's talk about one of the hot topics this week. It's going to be all about the Federal Reserve. Big surprise there. But it's also going to be about what they're going to do about financial conditions. Remember, we have actually seen financial conditions tighten quite a bit since the start of the war in Ukraine. For our TV audience, you can see the chart. For our radio audience, what you need to know really is financial conditions have tightened more and more until July. You saw this massive reversal in the stock market where you did actually see it actually pushing financial conditions higher. Remember, a weaker dollar has also played into that story. The question is, how much room does it actually give the Federal Reserve? Do they really need to do anything about it? Or is the market actually readjusting and really assimilating to the new market dynamics? Let's ask Phil Serafino, a senior markets editor for Bloomberg. He joins us now from Paris. Phil, what do you make of all this?
You know, you have to think that the Fed probably doesn't want to see financial conditions getting looser going into the fall. You know, their goal is to cool the economy down, and the stock market, frankly, is pricing in good times ahead. You know, investors are assuming the Fed is going to succeed in cooling inflation, slowing the economy a little bit, but not tipping it into a recession. If you look at the market since mid-June when it started rallying, all 11 sectors of the S&P 500 are up. Consumer discretionary stocks are leading the way. That's like autos, retailers, casinos, hotels. That doesn't sound like a cooling economy. So, you know, the financial conditions are saying, hey, things aren't so bad. And the Fed definitely wants to cool things down a little bit.
Phil, good morning. Does that mean we are expecting, well, we're primed for good news and could be wrong-footed by bad news? And we'll have some key data points out from the US, of course, in early September.
Yeah, absolutely. I mean, the market is assuming, again, that everything goes just right. And the Fed, I think, has been pretty clear that they'll do what's necessary to cool inflation. Investors over the past couple months, though, have looked at every economic point, every statement by the Fed, and assumed the best possible outcome, that the Fed won't go too far. So, you know, you've got Jackson Hole, Jay Powell on Friday might want to send a message. And then, as you said, in early September, we've got the jobs report in the U.S. and CPI data coming in the middle of the month before the Fed meeting later in the month. So, I mean, there's a lot riding on those data points for the market.
Phil, thanks very much for the update. Bloomberg's Phil Serafino there with the latest on market moves ahead of Jackson Hole and the speech we're going to get from Jerome Powell there. For more on the market, for analysis, check out MLIV Go on your Bloomberg terminal. That is the Markets Live blog. This is Bloomberg.
อินซีย์ไม่ได้มีดีแค่ปูนการที่เป็นอินซีย์ติดแน่นติดนานติดใจ
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. the fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need good old-fashioned combustible fuel. Now, startups around the world are betting that hydrogen can become the fuel of the 21st century.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Kriti Gupta in New York and Anna Edwards in London. Matt Miller is off today. Now, keeping you up to date with news from around the world, here's the first word. Since the start of the war in Ukraine, China has increased its purchases of energy from Russia. According to the latest customs figures, spending on oil, coal, and gas has risen from $20 billion a year ago to $35 billion. That increase comes as other countries shun Russian goods as punishment for the invasion. Meanwhile, Germany may have to extend its use of nuclear power if it's not able to replace all of its imports of Russian natural gas this winter. Berlin had decided to exit atomic energy permanently by the end of the year, but Chancellor Olaf Scholz and Economy Minister Robert Habeck said that there's the option of extending the lives of Germany's last 3 reactors past December. The U.S. and South Korea have begun their biggest joint military exercise in about 5 years. That's after taking a break on large-scale drills failed to lead to North Korea's Kim Jong-un to make concessions in disarmament talks. The exercise will involve thousands of troops and will stimulate a response to an invasion from North Korea. In the UK, Rishi Sunak has told the frontrunner to be the next prime minister that she has a choice to make. Sunak says Liz Truss can either deliver support for struggling British households this winter, or she can stick to her policy of tax cuts. He is pledging for more direct aid. And of course, Anna, it's a tough picture for fiscal policymakers in the UK and monetary policymakers as well.
Yeah, absolutely. The fiscal focus not made any easier by the fact that we are witnessing a leadership context and the decision still to be made about who becomes the next UK Prime Minister. Coming up, we'll talk about global macro. Freya Breamish joins us from TS Lombard. This is Bloomberg.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably couldn't spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by making, you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel. And I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, I mean, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I mean, I watched the offshoring, I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, you know, proximity is going to be key.
Top names at the Fed are on Bloomberg.
It is essential we get inflation down. People want jobs, but they also want low and stable inflation. We have to give them both.
Nobody covers the Fed like Bloomberg, your global business authority. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China tries to fix a worsening housing crisis. Banks lower their benchmark lending rates while the government steps up support for the property sector. Walkout. 2,000 dock workers began an 8-day strike at the UK's busiest port for container ships. They rejected a contract offer as inadequate. And a shake-up at Credit Suisse. There will be a new CFO and operations chief. All this as the Swiss lender prepares for a major restructuring of its struggling investment bank. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons in New York. Matt Miller is off today. Kriti, US futures then under pressure. European stocks, risk assets more broadly under pressure. Higher energy costs here in Europe, the focus. What's in focus ahead of the US Open?
Yeah, well, it seems like pulling out of the stock market, or at least equities as an asset class, is really the story globally. And you can see that really right at the top, Anna, as you mentioned, the future story down 1.2% in pre-market trading. Even yields kind of unchanged, even though you did see some intraday volatility earlier in the Asian session. But I really think the dollar is the story here, because remember, those inverse correlations that you see between the dollar and the commodity space is also just as strong in dollar versus the stock space. And that seems to be the theme as well. Bloomberg Dollar Index up about 0.2%. But once again, it really is that risk-off story that you can even see in Bitcoin futures down 1.5%, Kaylee.
Yeah, and a lot of declines for Bitcoin over Friday and Saturday as well. So perhaps no surprise, crypto-related equities aren't doing so well in pre-market trading today. The likes of Marathon Digital and Coinbase, the big crypto exchange, are each lower in the ballpark of 3 to 4%. You're also seeing some air come out of other speculative areas of the equity market, like those meme stocks, including AMC, which actually its preferred stock, APE, will begin trading on the New York Stock Exchange today. So that in part may be what is weighing heavily on the shares this morning, down 34% before the bell. And of course, for Bed Bath & Beyond, which caught all of our attention in recent weeks, it fell 50% between Thursday and Friday. It is adding to those losses today, down nearly 10% before the bell, Anna.
Kaylee, European stocks under pressure today. We've got weakness across European equity markets. There we go. Stocks Europe 600 down by 1.2%. In particular, France and Paris of the major markets coming under some pressure. And a lot of this has to do with higher energy prices. This is the European benchmark in euros per megawatt hour, 14.5% higher. And that is just in today's trading. The catalyst for this, Russia saying it needs to do another 3 days of maintenance on that one turbine that's functioning through the Nord Stream pipeline. So that'll happen at the end of this month. That raises questions about whether flows get turned back on. We're back to having that conversation again. And so Germany searches for alternatives in the meantime. The euro is responding to the same story. We went below parity briefly a little bit earlier on, an hour or so ago, but now at 1.0005, 0.3% weaker for the euro against the US dollar. Are we going to be talking, in the words of Nomura, are we going to be talking about blackouts around Europe periodically over the winter? And that's going to be something that will weigh on the currency perhaps. Cineworld is a London-listed operator of cinemas or movie theatres. It operates the Regal chain over in the United States. Nearly 70% of revenues come from the US, and they've said today that they may seek Chapter 11 bankruptcy. Kaylee, you reminded me, of course, that on Friday we saw a really big drop in the share price here of this company. Now sort of bouncing back a little bit from some of that, some of those losses on Friday, but absolutely not making up for those losses on Friday, up by 2.7% today.
Yeah, it doesn't go too far to erase the 58% decline of Friday, but at least it's something, Anna. All right, let's turn back to the broader global economy now as we await Jackson Hole later on this this week, one question seems to be on everyone's minds. Is a recession necessary to rein in inflation? That, of course, is the question from our MLive Pulse survey. Here is how people have responded.
This likely recession that we're heading into is largely supply-driven, supply shortages.
Recession certainly is a potential cure for inflation.
The medicine is probably supply-side related. Supply problems require supply solutions, not something that monetary policy is apt. And so driving a recession is really a poor and suboptimal outcome.
There's no need for central banks to ram a recession down the throat of economies. It's simply do not need rates to be moving higher.
We just need a period of absorbing and also allowing some of those mechanisms to work its way through.
I actually think the U.S. economy can withstand much higher interest rates than I think people give it credit for.
Joining us now to add her voice to that chorus is Freya Beamish, head of macro research at TS Lombard. So, Freya, what do you say? Is a recession required?
Funny, we're almost back to asking that same question that was asked of Margaret Thatcher in the 70s, and her answer was unequivocally the TINA, the original TINA. There is no alternative to a recession to cure inflation. I'd probably add a clause to that, which is if your politicians are not able to deal with the problem through more targeted fiscal spending and taxation, then a recession is necessary to cure inflation, and that's exactly what we see. So the buck gets passed to the central bankers across developed markets, and central bankers have very blunt tools. And therefore, it is more likely that you get a recession. But I think there's a slightly flippant answer. If we really look at the dilemma that policymakers and central bankers are facing, it's not one that you want to foist upon anyone. And it's this type of propensity. If I look at it through the credit prism, I think it becomes clearer, because you do have a need for central bankers to break spirals. If you think of inflation being very high, and therefore real interest rates are very low, and therefore credit demand is perpetuated at a higher growth rate, and that keeps this demand supply imbalance running, and therefore inflation keeps running, and therefore the real interest rate is not sufficiently constraining. It takes the central bank in some cases to step in and raise real interest rates to a level that is constraining, and a recession tends to follow that. So when we get to kind of go ahead, sorry.
Yeah. No, so a recession tends to follow that. Your view, Freya. You also talk in your notes ahead of our conversation about a mirage of disinflation. So disinflation being a reduced level of inflation, but still seeing price rises year over year, so still seeing inflation. What kind of levels will we disinflate to, do you think, Freya, and why will it be a mirage?
I think what's the key metrics that we're looking to is the core of inflation, and almost the core of inflation. You start to exclude everything, there's nothing left, but that kind of the part of the basket that's driven by wages. Broadly speaking, to give you the numbers, the core inflation rate that we're looking at by sort of Q2 of next year is around 3.5%, with significant risks on either side of that. But the narrative, once we get past this terminal rate for the Fed funds rate, is going to switch to this disinflation story, which has been very much driven by commodities. So if I put that in the bigger context, the bigger picture context of the 2020s, it's almost like a sort of a hawkish sandwich around this mirage of disinflation that we see starting to dominate the narrative in 2023. So in the short term, we see the Fed funds rate will probably have to peak somewhat higher than is currently expected by markets. And then you get this disinflation mirage starting to dominate the narrative, but that really only gives you a better entry point for the reality of the remainder of the 2020s, which we think is that there will be higher inflation on average over that period than there was over the 2010s. And in the case of the US and maybe even the euro area, you probably get a bit higher growth as well. The implication of that being higher yields, Fed acceptance of higher wage growth, and therefore a steeper curve, but also lower valuations go hand in hand with that as well. So there has to be some kind of a market capitulation as it becomes clear that this mirage of disinflation inflation is in fact a mirage as you move through from 23 into 24, and you get the final kind of reckoning that inflation is actually going to settle higher than the post-global financial crisis cycle.
Freya, at the beginning of the segment, you made a Margaret Thatcher reference that I absolutely adore. Let's stick with that time frame here because so many parallels have been made in terms of the energy story of now to the energy story of the 70s. I'm curious of what follows. Are we in for an 80s-like dynamic?
This is one of the reasons why we think inflation is going to be higher and not in a benign way. So most of the time you think inflation is just an out-and-out bad thing. Some inflation, where it redirects income towards the household sector, might actually then somehow cause higher growth. So it's not necessarily a bad thing from a real